All right, folks, by the way, speaking of buying dips here, right? No asset has been a better buy on dips than Bitcoin. I mean, but its latest struggles, again, every time they struggle, people start to wonder. So I think it's a perfect time for us to take a not so random walk down the history of cryptocurrency, folks. And, you can see here, 1983 is when the first time a cryptographer started talking about electric money. 2008, Satoshi Nakamoto, whoever he or she may be, published Bitcoin, peer-to-peer electronic cash system on Bitcoin.com. The mining began the nenext year. Then altcoins began to trade. Litecoin was one of the first ones. And then came that sort of dark period, right? 2014, you have Mt. Gox, a huge hack. And then Silk Road, the founder there, Ross Ulbricht, was sentenced to life. Of course, that was really highly controversial. And almost everyone admitted that penalty was overly harsh. President Trump has since pardoned Ross. 2015 saw the debut of Ethereum and the continued evolution of altcoins, right? And the list goes on and on, but these are some of the big names out there: Tether, Ethereum, Solana. And now, of course, the major story these days is that it's been embraced, right? Crypto has been embraced by Wall Street, which hated it. I mean, think about JP Morgan once, CEO Jamie Dimon called Bitcoin a pet rock. Well, they love it now. And then maybe the cherry on top has been the Trump administration. Their embrace of crypto has marked a significant reversal from where the Biden administration was. And of course, since 2013, Bitcoin, folks, has been the #1 performing asset 9 times. Now, the flip side of that has been the worst 3 times. Overall, the result, it's up only 847,000%. And although it's hit a rough patch this year, my next guest says it will likely be a big winner next year. So let's bring in Sandbox Financial Partners, the Director of Investment, Blake Millard. Blake, but you are, right now, you say the way it's trading is something of a yellow flag at this particular moment.
Yeah, so Bitcoin's price has definitely broken down here in Q4, and that gives us a pause because of its high correlation to large cap growth equities. Normally, Bitcoin trades pretty in tandem with the Qs. And what has happened more recently in the fourth quarter is Bitcoin has broken down immensely. So while Bitcoin is about 40% in a 40% drawdown, the Qs are just trading right near all-time highs. So is there a signal there, or is there about to be a massive catch-up trade from Bitcoin up to all-time highs again?
If it starts to make this big reversal, though, at some point it becomes a buy signal.
Absolutely.
I mean, in the past, if you bought the Bitcoin dip, you've done extraordinarily well.
Yeah, so again, a lot of this, like most things, depends on your time horizon. So if you're a short-term trader, you have some headwinds now.
Right.
It's trading below a lot of its moving averages, which are now downward sloping. If you see upward movement, expect some selling pressure as you see overbought signals. But again, time horizon is everything. So if you're a longer-term investor and you're patient, these are, volatility is often just disguised as opportunity.
Right.
These are very attractive entry points for long-term investors.
Yeah, I mean, it always has been. Wall Street's involvement, it's been huge now, right? I was skeptical initially. How do you feel about it? Has it added credibility, or does it take away from the idea of this independent entity, away from Wall Street, away from governments? How do you feel about it?
Great question, and I hear the skepticism all the time. Wall Street entering the crypto foray does seem a little bit like the fox entering the hen house. Right. So I would say this, though, that it has brought tremendous structure, credibility to the space. You have daily liquidity now. These are highly regulated products that are, 40 Act funds. You don't have to deal with these weird on and off ramps and CZ and these dark pools and wallets and all of that. You can just apply this now directly in your Fidelity Schwab account, and it's a regulated product with full transparency, liquidity, and depth in the market.
Let me get your thoughts on the Federal Reserve rate cuts, right? So they cut rates in 2020, right, March 2020. Then they cut them for a long time. Then, of course, they started cutting it last year. This is sort of controversial, right before the election, 50 basis points. Where are we with the Fed? What do you see? Let's say between now and the end of next year, 2026, how many rate cuts do you anticipate?
So there will be more and more rate cuts, but like we saw from the last Fed meeting, it's not necessarily the rate cuts themselves. It's always about the messaging. So the big banana peel that wiped out the market in October was Fed Chair Jerome Powell saying that December was no longer a foregone conclusion. Do we see a similar messaging like that next week in the conference after what is likely projected to be a rate cut. Furthermore, a lot of the questions now are probably going to start pinpointing that handoff from Powell to what is an increasing probability of Hassett as a
and you're
possibility.
okay with Hassett?
Not necessarily. So okay. I think there's a few different things that you want to look for in a Fed chair. I think credibility is one of them. So you got to tip your hand there for Scott Bessent. If you want to look at someone's resume, someone like Hassett is intellectually brilliant, but he doesn't have the practical, in the weeds the same way that, again, Bessent has. And, if you look at Waller.
Well, what about Waller?
Waller's track record this side of the pandemic has been fantastic. So not exactly the best person for the job. And I think the one thing that the market keeps hanging its head on is the risk that Hassett is just an extension of the White House. Again, that Fed independence issue. So that is definitely a risk that people are going to have to
Although
pay
since
attention
he's
to.
gone up in the betting markets, the market has rallied pretty significantly. Maybe because the market just wants someone dovish.
We're getting those cuts.
I want to let folks know that year-end rally, you're looking at seasonality, buybacks, technicals, and Fed rate cuts. Got to leave it there, Blake.
Great
Good
to
stuff,
see you,
my man.
Charles.
Appreciate
Thanks so
it.